Tax Tip Tuesday is brought to you by PorterKinney, the Tri-Cities premier CPA firm.
It is now 6:49. You're watching Wake Up Northwest, and in this morning's Tax Tip Tuesday, we are talking with Chris Porter from PorterKinney. Good morning, Chris.
Good morning.
Glad the snow has kind of let up here a little bit so you can actually venture out and about. And today we're talking about ways to increase your sales tax deduction. So first of all, what type of sales tax can you actually deduct?
So that's a great question. So basically, taxpayers can take as an itemized deduction either the state income taxes that they pay or the state sales tax that they paid. And in Washington, we don't pay state income taxes.
Right.
So we're going to deduct state sales tax. So there's two ways to calculate it. Okay. Number one, you could save every receipt from every purchase throughout the entire year and literally add up how much sales tax you paid.
Right.
You could imagine how many of us actually go through that hassle.
Yeah.
Very few. Secondly, you could take an estimated amount of sales tax based on your income and filing status.
Okay.
And then add to that sales tax paid on large purchases such as a car, a boat, or a home remodel.
Okay. So what would be the average sales tax deduction that you guys normally see?
Probably about $2,000 or $3,000 a year.
Okay, so then you add that to your normal itemized deductions in hopes of reaching that new
standard deduction.
Exactly.
Yeah. In hopes of exceeding it, right?
Right.
Yes.
Because if you meet it, then it's just a wash.
That's right.
So you got to exceed it. So you got to keep track of those large purchases. And then what about keeping those receipts? Do you need to keep the receipts for the large purchases if you're like doing that general percentage?
Yeah, all of us should keep receipts for large purchases. So if you hire a contractor to do a new kitchen or a new bathroom, save that receipt. If you're a do-it-yourselfer and you go to Home Depot, 29 times to get those new floors in and new countertops in, save all of those receipts and add up the sales tax on every one of them.
I should have thought about that this weekend because I made at least 30 trips to Lowe's here this weekend. What other type of things should taxpayers be thinking about when it comes to itemizing those sales tax?
Well, one problem we see, especially when people do taxes on their own, is they'll get an estimated sales tax based on our state sales tax rate, which is 6.5%, but we don't pay 6.5% in the Tri-Cities total sales tax because we pay 2.1% city tax and 6.5% state tax. So we actually pay in all of the Tri-Cities 8.6%. So when you're coming up with your estimated sales tax, you want to use 8.6%, not 6.5%. I know that's a small technicality, but we see that mistake a lot on tax returns.
Right, and when you itemize with using sales tax, does that send up a red flag to the IRS?
It doesn't, but sometimes if you have a very significant sales tax purchase, such as a large home remodel, they might ask for some documentation. Okay.
Hey, Chris, thank you so much. Always great advice. It is now 6:52. You're watching Wake Up Northwest, your full forecast in the morning rush, just 2 minutes away.